SN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
We are back, and you are listening to the Financial Survival Network. Well, it looks like we are living through interesting times, but they are rapidly spinning out of control. And that's not my words. Those are the words of the person you're about to hear from, none other than Rick Ackerman of Rick's Picks. And Rick Ackerman, you'll find him at rickackerman.com. Great technical trader. And Rick, welcome back to the show.
Thanks for inviting me on, Kerry.
Hey, so I know you're not a big follower of the noise, otherwise known white noise, really, otherwise known as the news, the spin cycle. But we've been having FOMC week, and normally when that happens, you can count on bear raids crushing gold prices and silver prices along with it. But the converse has happened. We saw gold today, Rick. It's Thursday, June 19th, 2014. We see gold up $20 the ounce. We see silver up 45 cents the ounce. And what the heck is going on here, Rick?
Well, for sure, gold isn't getting crushed this Fed announcement week. In fact, gold looks so good that I've actually kind of come around. I've been a little bit disparaging of gold, but we tripped a target today that projects as high as 1445 on the August contract. It's currently trading around 1300, so that's quite a bit of potential. I should also mention that somewhere between here and there, there's a what I call a midpoint hidden pivot at 1342.60. So that's really the number to beat. And if August gold gets a few points above that or closes above it, I would say the 1445 target has an even odd shot. Let me mention one other target for these very oversold junior mining stocks. They're tracked by an ETF vehicle called GDXJ. And when it was trading 38 last week, I put out a $47.38 target, currently trading at 41.91. So we've got a lot of room on the upside there, and it looks pretty good to me.
Yeah, so GDXJ, huh? And these junior miners, Rick, I mean, we've talked about them many times in the past. They've been all but left for dead, haven't they?
Yeah, and you have so much leverage in those companies. You know, I visited a few of the mine sites myself, and, you know, contrary to what Mark Twain said about a gold mine being a hole in the ground with the liar standing at the edge of it, well, it's usually the CEO of a mining company who knows what he's got in the ground, and he's just thinking, geez, why don't investors understand this? But they will come to understand it eventually if physical gold is on its way higher. The mining companies have struggled to keep their costs down, and that's a big problem. But you know, the junior miners in particular have shown themselves to be pretty resilient in recent months, even as COMEX gold prices have come down.
Yeah, isn't that amazing? And yeah, obviously, it appears that the stocks have really hit a bottom there. I mean, when you're selling at liquidation value, and some of these stocks, really, they're worth less than the cash that they have in the bank, right?
Yeah, it's sad but true. But you know, things have a way of coming around and reflecting reality rather than despair.
Yeah, that's a good way of putting it. Yeah, it's just amazing. You know, I made money in these things in 2011 when they had their last peak, and I've just been on the sidelines waiting for the opportunity. And do you play the individual miners, or do you just go for a GDXJ?
I occasionally take a flyer in one of these little stocks, and I, you know, my mother has been disdaining my advice for 40 years because I had her do some covered rights on Lowe's Corp, and the stock got called away. So she finally took my advice, and I got her into a little stock called Detour Gold that I've always liked, and made some money and actually got out about the time that you probably got out yourself. But these stocks look good to me now, and they really have been pretty buoyant either with the physical coming down. So it's a good time to be looking at them, and some of the better stocks there. The ones really with the capital to have gotten through the difficult straits of the last couple of years are especially good bets.
Yeah, I think you're right, and they're so out of favor that it's just got to make you wonder. Like, the rest of the market is so overvalued and so detached from economic reality, and yet you look at this mining sector and precious metals mining sector and forget it. I mean, it's just trading at levels below book value. I mean, Benjamin Graham would have a field day with some of these stocks, Yeah,
I went on a mining junket with a company called Rye Patch. They have lot of. Well, they've got some leases in Nevada, and the CEO of the company, Bill Howell, would kind of take in Rye Patch's leases with the sweep of the hand, and it looked to cover it was the whole panorama of Nevada. We were just sort of looking out over the landscape, and he was saying, we've got leases here, 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 and there. And the company is really well run, and at the time, they had a lawsuit pending in the Nevada Supreme Court. It was a dispute with Coeur d'Alene.
Right.
Coeur d'Alene had forgotten to renew its leases, and according to the law, any company can come in and overstake their claim. So Rye Patch did that, and if court precedent had held, they would have owned Rye Patch. It was basically a major coup, but the Nevada Supreme Court essentially broke the precedent. I guess they didn't want to disrupt the operations of a very large company like Coeur d'Alene, and they awarded the Rye Patch, I think it was $40 million and some favorable leasing terms. But that $40 million, the stock actually tanked on the news because everybody apparently was expecting the lawsuit to settle so favorably in Rye Patch's favor that they would literally own Coeur d'Alene. That didn't happen. Rye Patch is still out there, and I think they're still doing everything right.
A great call. I think I interviewed the management a while back on Rye Patch, and every dog has its day, but this is a show dog, the mining sector, the good stocks there. But you have to be very wary because, Bay Street in Vancouver has the ability to put out an unlimited amount of paper. And, what you have to understand is once manipulation of the actual physical metal ends, that's when the stocks will outperform the metal in all likelihood, right?
Right.
So
Rye Patch has been skittering along at 15 cents for a while. It's not like it's taken off and it's gone out of sight. The stock has traded as high as 80 cents in the last couple of years. So it's at the very low end of what it's been doing since 2008.
Yeah. Yep. I made some money on that stock once upon a time, but for disclosure's sake, don't own any at the present time. So, and we can't give advice on anything here. So just so you know, it just looks interesting, and do your own research and all that stuff, and go to Wall Street if you want sound financial advice on how to lose all your money.
But of course.
Just have to put that out there, right? It's important that you know who has your interest and who has your back, right?
When I use the word Wall Street, I'm being about as cynical as I can, and I guess the disclosure rules say that people should always do their due diligence, and I wouldn't argue with that. But if you go back to the source on Wall Street, that's where all the thieves are.
The den of vipers that are determined. Hey, by the way, I'm sure you caught that article now that central banks own somewhere around $29 trillion worth of the world's equities.
Right.
If
you're talking about, is that Jim Sinclair?
It's been circulating all over the internet. It's an interesting thesis.
That was it was posted also at Al Corlin's site, the Corlin Economics Report, and I looked at it and I couldn't make hide nor hair of it. It's so full of non sequiturs and holes. It doesn't make sense to me at all. Let me point out that it's impossible for the Fed to own anything really, and in fact, there's no real ownership in the Fed. There's no stock that confers ownership. So we have a double negative there, but I think Sinclair's figure was $60 billion. But if you read the original article, he must have been out of his gourd when he wrote that, because nothing in it makes sense to me at all.
Yeah. I think what I do think it's fair to say is that every market's rigged, and there's no question but that central banks have been intervening in the stock market to keep it up. We know that there's the president's working group on financial markets, and that they strayed from their original purpose, which was to intervene in markets during financial panics to stop them from collapsing. But let's talk more upon our return.
Let me make it. Yeah. Okay.
Okay, when we come back on the Financial Survival Network.
FSN Radio.
When your accountant wants tax-free income, this is what he does. Accountants know the law. They also know that any American could legally get paid up to 3 times per month, 100% tax-free. That's 36 tax-free checks each year. It doesn't matter what you make already. This simple strategy could work for anyone. Go to www.irsrevenge2.com to learn how. That's irsrevenge2.com.
The Financial Survival Network. It's all about what's next.
We're back with Rick Ackerman on the Financial Survival Network. I'm Kerry Lutz. So, Rick, $29 trillion, the number is astounding. They could very well own derivatives in that amount at any given day. Who knows? There is no way to prove this number, but it sure did get a lot of headlines, huh?
Well, let me put something out here. The Fed doesn't really need to own anything. It's put such liquidity into the banking system that you can see that all the players, the mainly big financial institutions that are able to borrow money for nothing or very close to it, they're doing all the I'm not even going to say heavy lifting. The heavy lifting is done essentially by short covering. All markets rally through prior resistance, not based on bullish thinking. It's not like even these institutional money managers, the hedge fund guys, are bullish when they buy stock. It's just something that's moving that they put in play, and there's no bullish buying as such. There's only technical buying, and in that respect, short covering is the best kind of buying you can get. So there is that working group that is loosely referred to or colloquially referred to as the Plunge Protection Team.
The PPT.
Right, but who needs a plunge protection team when you've got all these shorts out there who are nervous as hell? And, we saw yesterday on non-news from our Fed chairwoman who says the same blather every time she talks. You know what the outcome's going to be, and yet this was yet one more occasion to extrapolate a short squeeze from the non-news. So I don't buy into this idea that the Fed's in there working the markets. They've got enough players out there who are beneficiaries of free money that the Fed doesn't really have to worry about it.
Yeah, and the Fed is the Pied Piper, So through pulling the strings in interest rates, in liquidity, in a million other things that they do, in speaking to the participants, the big participants, and, they're loaning money indirectly to the hedge funds. They call the shots here directly and indirectly. So, and let's face it, I've always said that they effectively own the banks since the last crisis, since 2008. All of these banks, whether it's J.P. Morgan Chase or BOA or Citibank or take your pick, they're just stage sets, Hollywood stage settings, and it's really the Fed when you pull away the Hollywood stage set. It's the Fed that's behind them anyway, right?
Well, if you go sort of one layer deeper with things that have been put out there by, for one, the book The Creature of Jekyll Island, the real conspirators are the bankers who created the Federal Reserve. The Federal Reserve is very obviously there to feed the banking system, to feed the bankers themselves. So rather than the banks being the ward of the Federal Reserve, it's the other way around. The Federal Reserve simply does the bidding of all these guys who make their money by being able to get as much of it as get unlimited quantities of it, essentially for nothing.
Yeah.
And Hayek back in 1937 was pretty much on target in saying that this would eventually enslave the borrowers. And it hasn't been a conspiracy that got us all deep in debt. It's really been two things. The banks make their money by lending on a spread. And of course, the borrowers, they've always had the ability to exercise some discretion about how much they borrow. But of course, when you get the 0% teasers pushed in your face constantly, it's really hard to resist. And when you're feeling rich simply because the effect of all this cheap credit has been to push the housing stock higher, well, everybody's feeling rich, and before you know it, they're borrowing so much against their homes that you get into a situation that we had like what we had in 2008. And as you know, I think we're only halfway to the bottom in the housing market, so the other shoe is going to drop one of these days.
Yeah, great point. And you can't borrow your way to prosperity. You and I guess we're old-fashioned, believe that you need to save and you need to defer your consumption and build wealth that way. But the Fed has become a great wealth destruction mechanism rather than a wealth building mechanism. So
surely the enemy of all savers, That's the flip side of stimulus. You've got the Fed trying to trip money into things that are riskier and riskier, and we see that today in a few very startling facts. One is that of the 10 top hedge funds, 10 top money managers, 4 of them are doing it with junk bond portfolios. And we've got these liquid alternative asset funds and very esoteric vehicles. And just to give you an idea of how desperate the world is for yield, yields on Spain's sovereign paper have come down under 6%. Before you know it, they're going to be trading within 100 basis points of U.S. Treasuries. And it's just telling you the world is throwing money at anything that promises any kind of yield at all. So since we learned nothing from the great financial crash, and all of this money has been essentially coaxed into risk.
Yeah, isn't it great? And it's just laying the groundwork for the next great financial bust, which probably isn't going to be that much longer, judging from what's going on, right?
Well, you never know, but I've been a perma bear since about 1968, and when I thought we had it in 1991, it was simply because I didn't have the imagination to understand or to see that the $300 and $400 billion sums we were dealing with back then, as seemingly significant, would be dwarfed by the ones that are staring at us now. So, it seems obvious to me, though, that the psychological buttress of this whole thing is the stock markets, the U.S. market in particular, trading up near record highs. And you just get this idea in the back of your head, even if you're not a market watcher, that, hey, how bad can things be if we got the Dow trading near 17,000? So we all know how that ends. At some point, the market's going to start down with a vengeance. No one's really going to know why initially, but it's going to undo all of this feeling of psychological well-being, this illusion that we have now that perhaps we're going to muddle through as long as the stock market's up in record territory.
So your opinion here, Rick, what's the solution for the individual here? As Joe Sixpack.
I love just the safety of the treasuries, and there's some paradox there because, the federal government, if you work the numbers, is already bankrupt. And I think that's more visible, really, in the government bonds at the state level. We don't really have a way of tracking what's going on with the municipalities, but you look at it like Flint, Michigan, and you can see where the rest of the country is headed at that level. But I like treasuries, long-term strips in particular, and I think we barely begun an unwind. When money starts coming out of stocks and into bonds, you're going to see that the bond rally that's occurred so far is you ain't seen nothing yet. And I think that eventually we're going to see the 10-year down around 1%. So there's a lot of room to rally. And, of course, that means huge capital gains for anyone sitting in these long-term treasury instruments, the, 26-year and the 10-year note.
Yeah, that makes sense to me, too. And, I just see a lot of deception here, a lot of people who are going to be sorely disappointed. And, I think some cash flowing real estate in markets with very tight rental markets too. I see that as being a good place to be. And in low tax jurisdictions with favorable pro landlord jurisdictions, definitely seems to be the place to be. And, let's face it, things are not good. There's no recovery other than the elusive recovery that the government seems to be foisting upon us. Even Janet Yellen is saying that the recovery is not all that great. So, Rick, people want to find out more about you, want to subscribe. Tell us how you go about doing that.
Just go to rickackerman.com. The actual service is Rick's Picks, but if you Google that, you'll find a pickle and relish vendor in New York. And also a football player from LaGrange, Illinois. But, rickackerman.com is the place. I am starting a new service here. It's called the Friday Jackpot Bet, and we're going to be using options in some of these lunatic stocks like Priceline and Google, which on a given Friday can have a swing of as much as $30. So the idea is to go opposite the initial swing of the day and to pick up options for less than $1 that can easily quadruple or octuple, or I've seen them go even to 20 times the value that they traded for in the course of that day. So I'm going to be doing that in real time, and you can get a free trial subscription just by going to my homepage and clicking on the relevant link. And again, we'll be doing that in real time in a virtual trading room tomorrow. All
right. That sounds pretty cool. And you'll see the link in the show notes to this interview and more on the financialsurvivalnetwork.com. Don't forget to sign up for our newsletter. Rick, we'll talk with you again real soon.
Thank you, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.